Hey, what's happening, guys? Dan Darrow here with another Options and Play video update. Today, I'm going to talk about the two scenarios where I will get into position or I'll enter an option strategy uh, several days, maybe a couple weeks, maybe even like a month before the catalyst that I'm really focused on, okay? And you know how I typically like to operate. Normally, it's like the day of, the day before earnings. One of those scenarios where I really like to wait right up until the catalyst. But there are situations where I'll break that rule, and both of those situations, so the ones I'm going to talk about, they require a directional bias. Okay, so I'm not going to break the rules for strategies that might be volatility based, so like strangles or straddles. All right, just because a lot of times, like if the trade gets like shifted materially in one direction, it kind of like throws off the whole like strategy or the skew, right? So if a stock runs very sharply to an event, then odds are if you'd opened that like 2 3 weeks ago, then the bull side of the strategy probably worth a lot and the bear side worth a little, and then it could kind of just throw off the entire risk reward going into that event. So basically, what I'm going to talk about, these are positions that are biased to one side, so either bullish or they're bearish, so like one directional, versus the volatility strategies, which are strictly like volatility based, so looking for just for a big move either way, right? Um, so what I like to look for to enter into trade early is if I think the like a significant move could be happening, it could be developing prior to that event, right? If I could potentially see like a significant move, like a significant rally happening into an event, right? And I have up here APLS. This is a bio. They have phase three, really a pivotal phase three binary outcome. Um, Data expected to come out sometime in like the next month, and this is one you can see that it's just pushing up into this 30 level, and if it starts to trigger above 30, if it starts to move into like the 31 area, this could really take off. So while the data probably not expected for another 2 weeks, this is one where tempted to get involved early, because if it starts to run, it could really break out and take off higher, and those option prices could really start to move materially ahead of that event, right? So basically what I'm watching is if I think there could be a significant breakout, maybe a significant breakdown, or whatever, for whatever reason, like a stock could move much higher or much lower, maybe like the week, 2 weeks, 3 weeks, even a month ahead of that event, then I don't mind getting involved early. And what I'll try to do is push those options out through that catalyst. Okay, so make sure that the options, like the expiration of those options, go out through the catalyst. So if it's earnings, then out through the earnings date. If it's data, then out through whenever the company guided, so January, so something out through January, right? Now, the other scenario is something like you'll see with Wells Fargo, which I'm going to talk about. So now, whereas APLS, huge data expected sometime, right? And the stock looks like it could break out. Wells Fargo going to have earnings. We already know the date set. It's the 14th. And what you can see is that what's happened with Wells Fargo is that it's really been kind of consolidating, chopping around underneath like this key pivot point, pivot resistance from last year, right? Now, whereas APLS looking good, like look, it could break out. Wells Fargo not quite there yet, but what's interesting about Wells Fargo is more from an option point of view. You can see that the February options, so these actually go about a month beyond the earnings date, beginning of or middle of February. You can see that the implied volatility, right? It's about 3 percentage points below its historical. So basically, this 2 month consolidation is really kind of sucked some of the implied volatility out of the options. So even though it's not exactly at the point where it looks like it's going to break out and run, what's interesting is that if possibly putting some of those on early, and maybe looking for like that implied volatility ramp ahead of earnings. So as people, a lot of traders tend to pile into these types of patterns, right? These types of trades, like either the day before, the day of, right? So you see like that late implied volatility surge right ahead of earnings. So a stock like this, where like the implied volatility is trading a few percentage points below historic, maybe you get involved a little bit early, because Like the stock could resolve to the consolidation could resolve higher, right? But also, you could see that implied volatility move up, right? Because it's trading a little bit below the historic level. So those are basically like the two scenarios where I wouldn't mind getting involved earlier. But again, it kind of revolves around having some sort of directional bias, right? Because don't really want to be entering volatility strategies that much earlier because the trades could really get skewed to one side. All right. So if you like these videos and you're looking for more information on options education or maybe more options trading ideas, please follow up with the link in the description for more information on options to play. All right. Hope you have a wonderful night, and I will talk to you all tomorrow.